Ever get that feeling? Like there's this force lurking behind the scenes of the financial world, moving trillions, quietly shaping things.
Pulling the levers.
Exactly.
Yeah.
Well, today we're diving deep into one of those forces, BlackRock.
And let me tell you, it's going to be a wild ride.
You guys send over a stack of their annual reports 2018, 2020, 21, 22, and 23. Talk about a reading list.
A whole lot of dense financial jargon to unpack, that's for sure.
So our mission, should we choose to accept it, which, spoiler alert, we did, is to crack the code. What's BlackRock really about? How do they operate? And what might their future hold?
And believe me, those reports, they're like treasure maps, full of hidden gems once you know how to read them.
All right, so BlackRock 101. Picture this. A company managing more money than the entire GDP of most countries.
No, seriously.
We're talking assets under management, or AUM. That'll make your head spin.
Back in 2018, it was already a cool $6.3 trillion. But here's the kicker. By 2023, that number had ballooned. We're talking over $9 trillion. It's mind-boggling.
It's like they added the entire GDP of Japan to their portfolio in just 5 years. Wow.
Talk about a power move.
No wonder BlackRock makes headlines.
Yeah.
But, okay, they're managing trillions.
Right.
But how? I mean, everyone knows them for those iShares ETFs.
Right. If you've even dipped your toes into the investing world, you've probably heard of iShares.
It was like the go-to for ETFs.
They're definitely BlackRock's bread and butter. Well, maybe not the whole bakery, but a huge EE chunk.
So how much are we talking about?
In 2020 alone, iShares raked in almost $200 billion in new investments.
Whoa. People really love them.
Especially the fixed income and sustainable options.
Sustainable investing, right? That keeps popping up in these reports, too. Seems like BlackRock's betting big on that. But they've got to have more up their sleeve than just ETFs.
Oh, absolutely. Think of it this way. BlackRock isn't just a store. It's like a whole financial mall.
Okay, I like that analogy.
They've got active funds, index funds, real estate, private equity. You name it, they've probably got a finger in that pie.
So they're catering to everyone. From your average investor like me who maybe throws a little something into an ETF each month,
Sure.
to these massive pension funds moving billions around.
Exactly. And that's key to understanding BlackRock's business model. This diverse approach across markets, across client types.
That's like the Amazon of finance.
But to really get how they tick, we need to go beyond the surface. We need to dissect those revenue streams.
Ooh, time to follow the money trail. I'm ready.
All right, let's talk money. Now, most people, they assume BlackRock just takes a fee on the assets they manage.
Right, the whole you pay them to manage your money, they take a cut thing.
Exactly. And while that's definitely a big piece of the puzzle, these reports, they reveal a much more, well, intricate revenue model.
Intriguing. So it's more than just those advisory fees you hear about.
Oh, yeah. For instance, there's the whole world of performance fees.
Okay, so like if BlackRock exceeds your investment goals, they get a bonus.
You got it. Higher returns for the client, bigger reward for BlackRock. But,
what's the catch?
well, reading through these reports, it's not quite as simple as all that.
Oh, I bet. Those reports get pretty into the weeds, don't they?
They do. But essentially, those performance fees, they're tied to very specific targets. And those targets, they change based on the type of investment.
So it's not just one performance fee for everything.
Nope. It's way more complex than that.
Okay, so different investments, different performance fees.
Yeah.
Got it. But there's still market volatility to factor in, right?
Ah, exactly. Makes predicting those fees a bit of a guessing game, even for the so-called experts.
So even BlackRock can't completely predict the market.
Mm-hmm.
You know, it's kind of comforting in a weird way.
Right.
Okay, but performance fees aside, what else is lurking in those revenue streams?
This is where things get really interesting. So remember how we talked about BlackRock managing trillions?
Yeah, hard to forget.
Well, sometimes they lend those assets out.
Wait, they lend it out.
Yep. It's called securities lending.
Okay, hold on. They're lending out what, like my hypothetical investments?
Mm-hmm.
To who and why?
Mostly to big institutions like hedge funds. Let's say a hedge fund needs a specific stock, maybe for some short-term trading strategy. They can borrow it from BlackRock. For a fee, of course.
So it's like BlackRock is running a financial library, loaning out valuable assets for a profit.
You got it.
Clever. But what happens if someone forgets to return a book? Or, well, you know, a few $1 million worth of stock.
That's the risk BlackRock has to manage. If the borrower can't return those securities, guess what? BlackRock is on the hook. They have to replace them.
And if that happens during, say, a market downturn?
Oof. Things could get very expensive very quickly.
Yeah, I bet. High risk, high reward.
Sure.
Seems to be a recurring theme with BlackRock.
It does, doesn't it?
But we've only been talking about one side of the coin here. BlackRock, they're not just operating in some kind of like financial vacuum, right?
Absolutely not. One thing that really struck me in these reports was their global reach.
Oh, right. They're everywhere, aren't they?
They are offices in over 30 countries. We're not just talking Wall Street giant here. We're talking global powerhouse.
So how do they even manage to cater to clients all over the world? Is it like a one-size-fits-all approach?
Not at all. And that's what's so fascinating. The 2022 report, for example, it highlighted how BlackRock tailors its approach based on regional differences.
Oh, interesting. Like what?
Well, for one, client preferences. What flies in Asia might not fly in Europe.
Makes sense. Different markets, different investors.
And of course, you've got the ever-changing regulatory landscape in different parts of the world. They have to navigate all that.
Talk about a juggling act.
Yeah.
Okay, so we've got this global financial powerhouse, juggling risks and rewards on a massive scale. But there's one element that BlackRock keeps emphasizing in these reports that I want to touch on. Their people.
And rightfully so. They're very open about the fact that their success relies heavily on their workforce. They even acknowledge the potential for, human error.
Human error. In this day and age of, like, algorithms and supercomputers making trades at lightning speed, you're telling me someone hitting the wrong button could still throw things into chaos.
Believe it or not, yes. The 2020 report was surprisingly candid about this. They're keenly aware that even in a digitized world, mistakes happen. And those mistakes, they can have huge financial repercussions, especially when you're dealing with the kind of sums BlackRock manages.
I mean, I guess that's reassuring in a way, right? Like, even at the highest levels of finance, it's still a human game.
Yeah.
So how does BlackRock try to, like, mitigate that risk?
Well, they invest heavily in their employees. And I don't just mean attracting top talent, but also ongoing training, development programs, all that. It's about making sure their workforce is equipped to handle the complexities of their operations.
So even with all the algorithms in the world, it still comes down to people.
Exactly. BlackRock gets that.
It's like they're saying, yeah, we have all this cutting-edge technology, but it's only as good as the humans running it.
Right.
I like that. That's a refreshing perspective. But speaking of the future, these annual reports, they're not just about reflecting on the past, right? They also give us a peek into the challenges and opportunities BlackRock sees on the horizon. So we've peeked behind the curtain of BlackRock's current operations.
The global juggling act, the revenue streams, the whole shebang.
But these annual reports,
They're not just backward-looking, are they?
not at all. They offer a glimpse into BlackRock's crystal ball. What do they see coming down the road? What's keeping them up at night?
Well, one thing that's clear, they're very aware of the regulatory landscape, always watching for the next change-up.
And in the financial world, never sits still, does it? New rules, new regulations, always popping up.
Exactly. BlackRock knows they're one new rule away from, well, a potential shakeup.
Any specific examples from the reports that come to mind, things that really jumped out at you?
Oh, definitely. Remember back in 2018 when the Federal Reserve was looking at BlackRock?
In relation to the Bank Holding Company Act.
That's the one. PNC Bank owned a big chunk of BlackRock back then.
Yeah, and there was all that talk about classifying them as a bank subsidiary.
Which would meant a whole other level of regulations.
That whole too big to fail debate.
Exactly. So did BlackRock dodge a bullet there.
They did.
Yeah.
But talk about walking a tightrope.
Yeah.
And it's not just about navigating the current rules, is it? It's about trying to anticipate what's next.
Exactly. The 2020 report, for instance, they were already gearing up for tighter regulations on derivatives.
Like what? What kind of things were they expecting?
Stricter limits, for one, beefed up risk management, that kind of thing. They're always looking ahead.
Always one step ahead of the regulators.
Trying to be, at least.
It's like a game of chess, isn't it?
High-stakes chess, for sure.
And speaking of high stakes, we haven't even touched on the elephant in the room. ESG investing.
It's everywhere these days.
And BlackRock seems to be going all in.
Oh, absolutely. And it's not just a PR move. These reports, they show that BlackRock sees ESG as a fundamental shift. The way investors think, the way they allocate capital.
Remember that surge in their iShares sustainable ETF offerings we talked about?
By 2020, they were managing almost $80 billion in those ESG-focused ETFs alone. That's a clear sign, in my book.
They're putting their money where their mouth is. But let's be real, ESG, it can be a bit of a minefield.
Oh, for sure.
There's no universal rule book, is there? What one person considers ESG compliant, Another might not.
You got it. And BlackRock acknowledges that. One of the challenges they highlight is the lack of standardized ESG metrics.
Makes it tough to measure.
Exactly. What makes an investment sustainable? It can be pretty subjective.
So they're working on solutions, but
It's a work in progress, for sure. Huge potential, but a lot of unknowns. And then on top of all that, you've got increasing competition.
with that much money on the table,
Everyone wants a piece of the BlackRock pie.
it's a cutthroat world, even at the top.
Tell me about it. These reports show BlackRock is keeping a close eye on the rise of fintech companies.
Fintech, right. Another one of those buzzwords you can't escape these days.
But it's not just hype.
No, these startups, they're shaking things up.
BlackRock knows they can't just, rest on their laurels.
They have to adapt to survive.
Exactly. Their 2023 report really emphasized their investment in artificial intelligence, upgrading their Aladdin platform,
Aladdin.
their risk management system, their investment strategy. It all runs on Aladdin.
So if Aladdin catches a cold, BlackRock gets sick.
Pretty much. It's a big deal for them, staying ahead of the curve, especially when it comes to tech.
It's like they're betting the farm.
On data, AI, a rapidly changing global landscape.
Well, folks, there you have it. We've gone from BlackRock 101
Their massive size, those ubiquitous iShares,
to a much deeper understanding of how they operate, their global reach, even their potential vulnerabilities.
the constant pressure of regulations, those evolving revenue streams, their big gamble on things like ESG and AI.
But here's the thing about these annual reports. They raise more questions than they answer. Remember how we learned BlackRock has that subsidiary in the UK, the one that's a registered life insurance company?
Buried deep in the 2020 report.
Makes you wonder what else they're involved in that we haven't even scratched the surface of.
It's like we've only just opened the door a crack.
Exactly. Are they a force for good, pushing for more sustainable investing? Or are they a potential risk to the whole system, simply by being, well, too big to fail?
Or are they somewhere in between? That's the question, isn't it?
And that's the beauty of a deep dive like this. We've given you the knowledge, now it's up to you to connect the dots.
Draw your own conclusions.
And who knows, maybe this deep dive will inspire you to do some digging of your own. Those BlackRock annual reports, they're publicly available.
Go out there, explore, question.
Exactly. Until next time, keep diving deeper.